Good evening. In this opportunity, I'm going to talk about financial forecasting, financial reports, what I learned about the profit and no-profit organizations, stock, bonds, and the market. The financial forecasting is a process that includes analysis of the past business performance, current trends, and other relevant factors for the company. There's 4 types of financial forecast. The first one is the sales forecasting, that is to predict the amounts of products and services that we expect to sell. The second one will be the cash flow forecasting, that it's based on the factors as in income and expenses. This works for financial forecasting, and most companies use it for short terms. Then we have the budget forecasting, that helps the company to have an idea how much they are going to need to buy the stuff for the future. And the last one is the income forecasting, that it's the company's past revenue performance and the current growth rate that they estimate for the future. The financial reports are the process of documenting and communicating the financial activities and performance for specific periods in the company. They are mostly created quarterly or per year. Companies use these financial reports to organize the accounting data and report on current financial status. The most common financial statements for small or large companies are the balance sheet, financial statement, and cash flow statement. The balance sheet provides an accounting picture of the financial situations of a company, and it's like a snapshot of the business finances and current state. And the balance sheet is divided by assets, liabilities, and equity. The assets is whatever the company owns that has monetary value. Assets can be short-term or long-term. Also, like liabilities, that is everything related to the company's debt, also can be long-term or short-term. And finally, in the equity, we're gonna find all the capital contribution and profit retainers or preserved for future use and sales. The income statement. The income statement covers a range of time and provide an overview of revenue, expenses, net income, and earnings per share. It's a financial statement that reports the total revenue and expenses over a specific time or period in a company, which allow to the managers to make decisions for the future. On the income statement, we can find the gross profit, the EBITDA, and EBIT. The gross profit is going to be the result of the subtraction of net sales, which cost of goods sold. Then on the EBITDA, we're going to have the earning before interest, taxes, depreciation, and amortization. And finally, on the EBIT, we're going to find the earnings before interest and taxes. Then on the cash flow statement, we're going to have the measure of how well a company is generating cash to pay its debts, obligations, fund distribution, expansions, and fund investments, mostly in the short term. And this statement complement the balance sheet and the income statement because help them to make decisions. And this statement assists the companies to identify where cash is generated and where cash is distributed over a specific period of time. A nonprofit organization, it's going to be those organizations whose main objective are to provide charitable benefit to the community. An example can be public charities, foundations, churches, fraternal groups, everything related to address a social purpose. And the profit organizations are going to request the financial to survive. So they can request this through donations most of the time. Also, this no-profit funding is the process of obtaining funds to support a mission and operation for this organization. A profit organization is going to be a company whose main objective is earn income and profit for their founders, leaders, and employers. A profit organization as a non-profit organization, sometimes they're going to need financial support if they want to keep being competitive in the market, because it helps them to grow and generate profit for themselves and buy the resources that they need. How can a profit organization can request for financial support? They can do it through banks, credit corporative. They can have line of credit, long-term loans, friends, families, etc. About the market is gonna refer to any marketplace where securities trading occur, including bond and stocks. The market allows free negotiation between buyers and sellers, and this market is not only used for buy and sell, also helps to invest and request loans. So basically, the market is going to be the place where all the negotiations, transactions are made. As stocks, the stocks are going to be subscribed to capital generation divided into shares. The stocks are going to be represented by transferable certificates, which detail the constructive relationship between the company and stakeholders, shareholders, and also establish the division of risk, income, and control of the business. As stock markets also represent an important source of capital for those public companies. Finally, about the bonds, the bonds are going to be a security in which investors need money for a defined period and also preset interest rates. And these bonds are issued by corporations and also can be states or governments helping financial projects and operations. These bonds are issued agreed to repay the original amount of the loan, and usually they have to pay an extra of interest.